Now, Africa is rich in solar, wind and hydropower resources, and over the last 10 years, China has made considerable investments in renewable energy projects across the continent. Standard Bank is of the view that cooperation on renewable energy could become a more compelling and mutually advantageous peg to mature Africa-China relations. Jeremy Stevens, Standard Bank China economist, joins us with more detail. Thank you so much for joining us, Jeremy. I do understand that although it is kind of just afternoon here in South Africa, it's in the evening there on your side, so thank you for making the time. Just firstly, talk to us about the attractiveness of Africa to China as an investment destination in the renewable energy space.
Yeah, hi. Okay, well, first of all, thanks for having me, and it's cool to be on your show, so thanks for the time. We spent quite a lot of time recently trying to understand how China's internal transformation that has been sort of signaled since 2013 and been ongoing since then and escalating, how Africa can better align itself to benefit from the relationship between China and Africa. Because we do think that it makes sense to anchor our objectives around what China is doing and understanding why China is doing what it's trying to achieve. And so the obvious sort of combination of what China is trying to achieve and what Africa needs is in the renewable energy space. And obviously our job as a bank is to identify trends, make sure that they're going to be durable, and then align them with our clients and with African leadership. And we think going into FOCAC, it makes sense to highlight this nascent opportunity for Africa to better address some of its own regional energy needs, at the same time making itself incredibly valuable to Chinese companies.
Thank you for that, Jeremy. I really want to zone in here on then what we have seen to date in terms of the investment that China has been South African continent rather has been able to attract from Chinese investors.
So as it stands right now, what we've seen, one interesting anecdote is the fastest growing exports of the Chinese to Africa in the past 5 years has been lithium batteries to South Africa, and that reached almost 1.8 billion renminbi, in 2023. It's grown at a compound annual growth rate of 93% over the past 5 years. So we're already seeing them start to export significantly more and more to Africa. And our thesis is the Western world is very concerned about China and its sort of investment in supply. And the argument is that, the rest of the world isn't going to be absorbing China's industrial capacity as they move up the value chain. But we actually posit that the strategy is for domestic consumption first, so the market domestically, and then we think that it will lend itself to greater exports to the developing world because of the lower cost price. And we're seeing that in renewable, but a lot of pushback comes from sort of when I talk to US investors. But an anecdote, for example, is last month, China exported record amounts of vehicles, but 80% of those vehicles that it exported were ICE vehicles, not renewable energy vehicles. 85% of China's domestic production is for the domestic market of renewable vehicles. And really our belief is that similar to 5G, similar to smartphones, China's international competitiveness is going to see itself manifest in incredibly fast-growing exports of renewable energy equipment and technology. And we're trying to make the case that if we design policies better, we might be able to attract some of that capacity and manufacturing capacity in the continent, which we need for job creation and our own modernization and industrialization. So going back to your question, there's a whole range of Chinese companies that are already active in Africa's solar and wind. But in scale, because, for example, the expectation is by 2030, Africa will have about 300 gigawatts of renewable energy capacity. China's basically adding that to its own grid every 6 months. So in terms of scale, we're just very small. But our argument is that it's the domestic competitiveness and the strength of the Chinese capacity that we think will result in them wanting to do more in Africa. And like the original point of departure is what we're trying to do is align ourselves to what China wants and what it needs so that we can best benefit from this relationship. Because the reality is, since China's sort of started its own internal transformation away from investment-led growth and credit-led growth, since 2013, basically, we've actually seen the relevance of Africa decline to the Chinese. So our share of global trade, for example, South Africa was the 12th largest source of goods for China in 2015, and now we're out of the top 30. We're becoming less relevant to China. I think China imported more from Vietnam than it did from all of Africa last year. So we need to find new reasons to be incredibly viable as a partnership for the Chinese. And I think that this is one spear in that argument. Now, at the same time, we know that China's sort of international reputation has been dented. There's global pushback in terms of China from the Western world. And so there's also an argument to be made that Africa geopolitically matters more than ever before to the Chinese. So it's a combination of all these factors that we think will result in a rising role of Chinese in our renewable and wind energy.
Well, thank you for those insights, Jeremy. Just, as we wrap up the conversation, I think we have less than a minute left. You talk about the fact that we basically have to make ourselves more appealing to China. What then do policymakers need to be focusing on to make the environment more fertile for investment from China?
Well, you're right. So, I mean, one is obviously promote green and low carbon projects. One is to make sure that all the projects that we look at are commercially viable, make sure that we're managing risk, that we've got business viability studies out that are done. And if we're struggling with that, get Chinese help or other partners to help us with that. The key approach is not necessarily to de-risk a specific project, but it's to try and create a policy dynamic that incentivizes more private investment, whether it's from China or anywhere else, in our economies that can create more dynamic economies and help us industrialize and modernize and advance. And so it's a partnership with China, but also with other trading partners and amongst Africa itself. The free trade zones, obviously incredibly important. We need to basically become a much more alluring prospect for partnership. And that's the reality. If you look at the rest of the world, China's got being sort of seduced by all Asian economies that are trying to do more business with them. It's an incredibly competitive space. For us to attract Chinese investment, we need to make a pro-business environment. And so we need to foster that for our countries.
Very interesting insights indeed, Jeremy. Thank you for a great chat this afternoon or this evening for you. That was a Standard Bank Group economist, Jeremy Stevens.